Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 27th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. I hope you all had a fantastic Thanksgiving holiday here in the States. Looking at the market here in the daily time frame of the ES, you'll see we have mostly range-bound action. Again, coming out of last week, mostly sideways action. There's no trading day there on the Thursday there. You just see a very tiny day on a Friday, and now you see a multiple day narrow range that's developed. 1, 2, 3, 4, 5, 6, 7, 8. So today would be the 8th day of narrow range price action within the range. Upward trending still. We can shift this over to 8 there. And here's the compression right there. Reading, you have 40% of average, 78 points in there, normally averaging about 170 plus. And so if we get an expansive move here at some point on expansion, we should see somewhere along the lines of 200 plus points of range. 200 plus would be about here. You got about 223 on the 125, which is falling at the moment. So we have about 200 points of potential movement in this range once we get going. Now the trend is still significantly up. You have the 8-period average still rising very, very fast. Any pullback in there could lead to a continuation into the next upside targets. We had 4,600 as the market structure edge, and then we have the previous quarter's high, 46.34.5 as the previous quarter's high. So still working our way toward that edge. Any pullback could be a buying opportunity until proven otherwise. Even a pullback, say as deep as 4,500, could still be a continuation play higher until proven otherwise. Now today, on an intraday basis, a little bit of a rounded bottom intraday, trying to recover the previous session's low, 45.62, for a shot at perhaps new highs on the day. Now taking a look here at the NQ, kind of flat so far, failed new low developing. If you look here, we have already seen the previous, or reached the previous quarter's highs. So we had the outside quarter here and now back below. We still have a very narrow range here as well. Here's the 8-period reading. Very compressed here, usually averaging about 800 points. Right now the 125 is about 1,000. So easily 800 to 1,000 points of potential expansion is ahead once we get out of this range. Now again, is it to the upside? Do we fail? If we fail at 15.8, for example, do we drop 800 points back down, maybe 1,000 points back to the edge, and go back to break even for the quarter? So we could still fall back within the range here. If you're looking at the NQ over the last several months, we have developed very clear upper end of this trading range at 16. That's 16K. Down here about 14.5. You have about the 15,250 zone right in the middle. So if we're going to see expansion to the upside, it would open up another, 750 points of strength to the upside, 800, and that's about what we have in here at the very least. If we fail, we get back into the middle, maybe across the range as it continues to build out in this range. So continue to watch this edge very closely and the range in the NQ. Crude oil down about 0.4% right now. We have a very clear downtrending move that has continued to play out. The seasonal pattern here is for downtrending price action until about the first week of December here, and this has already been a move of about 22 points from the 94-95 zone down to about 72s. That's a big time drop here. We've had very clear downtrending price action. The bearish Pima trigger zone continues to be at play. You can see this little tail event here now through it. This would suggest a continuation down. We're still looking for a potential continuation down toward the previous quarter's low price right there. 69.69 is that level. 70 is a very nice round number. We have a very clear downtrend here. Still looking for weakness into that zone up ahead. Any pullback could be sold until proven otherwise. Looking at gold futures, up about 0.6% and testing the 2020 edge right now. This one's been in a range here that we talked about before 2020 here, down to about 1940, the middle about 1980. It's been trading within there. We've had an upward push toward 2020. We're looking for a test at that edge. Very close right now, 18.9. We could see a bit higher into 2020, maybe beyond it, and that would also be the previous quarter's high. Getting beyond that level will be an opportunity to watch for potential failure, which could then rotate prices back to 80 and 1940 up ahead. The 2020 level or zone up here has been incredible resistance. We really haven't seen much action beyond that level. Ever since the strong high and price fell back below that level, it's created a range here that's been in play ever since. So this is going to be a tough zone to break through for gold. I'd be watching for signs of failure up here. Failure could rotate this thing back toward 1940 down below. If there is an expansive move, a transition through this 2020 level, then you're looking at a retest here at 2080 to 2085 above. Lastly, looking at the YM. The YM right now really trending quietly higher. The never sell a dull market here really in play with the Dow 30 trending up. You can see how fast the 8 period continues to rise. Very intense trend here. This one also working its way higher toward the next edge above. We've talked about the 800s as key levels here for this market. 35.8, for example, being a key level. You have the 33.8 level as a key level. 34.8, it's about right here. And then now this is the 35.8 level right there. Well, maybe not that level, about right there or so. And that gives you the 1,000 point distributions that this market has used for much of the year. The fact that we've pushed well through 34.8 here suggests that we're headed higher to 35.8, and that's what we mentioned last time here, and it came into that level and put in this quarterly high. So we're still working our way into that quarterly high, which is 35.843. So somewhere between 35.8 and 35.850 could be the next target above. Any pullback could offer a nice opportunity for a push higher. So the next one-day sell-off we get could be a great opportunity to buy in for a continuation toward that edge up ahead. All right, that is it for now. We'll see how this plays out here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.